Hi everyone, and welcome to our semi-annual investor letter for 2023. I'm going to give you a short overview of what happened in markets during the second quarter, and then also touch on how the funds are positioned right now. It was quite the ride for South Africa during the second quarter of the year, with the rand starting the period at 18 rand to the US dollar, peaking as high as 19 rand 80 during the situation with Russian Navy boat in South Africa, and then coming back all the way to 80 rand at the end of the quarter. So you wouldn't see the volatility if you look at the ending numbers, but it was quite something. At the same time, South Africans during April and May experienced quite extreme levels of load shedding, where we pretty much had constant stage 6 load shedding and created the fears that we would go as high as stage 8 during the winter. In our previous quarterly update, we said based on the work we've done on the electricity situation, we think the worst might be happening right now, might already be behind us, and the picture over the next 12 or 18 months looks quite a bit better. And what we've seen in the last quarter really confirms that. We think that the electricity minister has made a real difference going to power stations, visiting them, improving the accountability at Eskom, and the private sector and individuals have continued to invest and improve their own power generation. So that early wins we've seen is that electricity availability factor that measures the total available electricity versus what Eskom theoretically could produce. That bottomed below 50%, which was really very, very poor and caused the high load shedding. That number's now back up to about 57 or 58% over the last month or two, which led to June being the best month for quite some time, with stage 0 load shedding during the day and typically stage 2 or 3 at night. We're going through a cold spell right now, where load shedding's increased again, but our view is that as the winter demand reduces and the temperature picks up, load shedding should look better, and into next year there's a chance that things could be substantially better. We cover this in quite a bit of detail in our semi-annual letter that's going to be released at the same time, so you're welcome to get more of our research in detail in there. Globally, the picture's been positive. From very high levels, we've seen inflation come down quite quickly, I think maybe faster than the market expected, with the US early in July printing at 3% inflation rate, which is the first time we're back at 3 for about almost 2 years. So that's been positive. And what surprised everyone is that central banks have hiked rates by 4 or 5% and hasn't yet meaningfully slowed down economies. I mean, things have tapered down, but the recession that everyone feared last year doesn't seem to have come yet. And this has given a nice boost to markets, with global markets being strong over the first half of the year. What we saw during the peak issues in South Africa, with both load shedding and the crisis about the Russian Navy ship, was real panic by many SA investors, just selling their SA shares and moving the money offshore. We took advantage of that, as we like buying when others are forced sellers or panic sellers, and we increased our exposure to South Africa during the past quarter. We focused on quality companies that we think will do well for the funds over the next year or two. Overall, we're happy with the portfolio. We've got a good balance of SA and offshore opportunities, and the portfolio should allow us to participate if the markets continue to run upwards, but we've got nice positions in it that will protect the downside in case things globally do start slowing down. One other thing to mention is that this is a special month for our business. We turned 25 years old on the 1st of July 2023. It's obviously been a great 25 years for both the business and hopefully for our investors as well. The one commitment I can give you is that returns will stay our number one focus for the next 25 years.